morning, and welcome to Fintech South 2020. My name is Chip Stevens, and it's an honor and a privilege to kick us off this morning. We've got a great agenda and some fantastic speakers. And it's perhaps fitting that Fintech South 2020 is coming to you this year digitally. Just a brief introduction on me. I work for Aflac Asset Management. We run a $120 billion investment portfolio. It's invested globally across asset classes and across currencies. I'm responsible for our macro investment function, and I run all our trading and our derivatives. I am responsible for our quantitative research efforts, chair our investment strategy group, and I am also responsible for our corporate venture capital program, which is targeted to the asset management space. I want to kick us off this morning by jumping to page 2 and looking at trends in corporate venture capital. And this is some information from our friends at McKinsey. So I think most folks here are aware of the strong increasing focus from corporations on the venture capital space. We've seen about a 35% year-on-year increase in the amount of organizations dedicated to venture capital, and about 84% of senior executives polled have indicated that they are looking to focus on innovation. Kind of makes you wonder what the other 16% are doing, but nonetheless, interesting comment there. And if you look at deal structure in venture capital, we've seen almost a doubling in the amount of corporate capital in the capital structure. So not just financials, but corporate partnership. And it's no surprise, I think, to most folks here that within fintech itself, the banking sector has been the most active in terms of just industry sectors dedicated to corporate venture capital. We'll talk more about asset management as a vertical a bit later. But before we do that, let's move on to the next page and talk just briefly about kind of the value proposition and how these programs are rationalized. So when you think about corporate venture capital, it's our approach, and I think our folks at McKinsey would agree that really the strategic value proposition is what drives the day. Venture capital as a standalone asset class can be questionable, like any other investing strategy. It has its pros and cons, but it is very crowded. There's a lot of capital chasing, not so many great ideas. And if you think about just at a macro level, we all think that these iPhones and iPads that we have really driven global productivity. Over the past 15 years, really the numbers suggest differently. We're actually not as productive now globally as we were 15 years ago. So there really aren't these transformative technologies as we think of them. A lot of the deal structuring and exits tend to be kind of financial deal engineering as opposed to real kind of value creation. So really at the heart of it, it's innovation. It is gaining insight. It's creating an innovative culture that should be the objectives of corporate venture capital. When you think about how to set up these programs, despite the fact that the returns themselves probably aren't the main driver, we would suggest that the platform be oriented towards an appropriate investment process. So clear investment objectives, role clarity across your organization, proper risk management and risk budgeting, performance attribution, etc. So really thinking of it as a portfolio and a proper investment process. And then in terms of some of the execution challenges, and I'll come to this in our final section, it's really important, we think, to be aware of the challenges in trying to create a culture of change and foster innovation. You're going to run into, by definition, some internal resistance just by virtue of some of the insecurities that can come from change, and that needs to be part of your design, and you need to anticipate that before you launch. Finally, just a deeper look into fintech in terms of where capital is being dedicated and formed. I mentioned that our strategy is focused on the asset management vertical, and that is a growing section of kind of fintech, again, broadly writ, but really it's still kind of the payment space and the consumer banking and retail segment, where most of the the activity is centered. That's obviously a broad statement, and what is encouraging, at least from our perspective, is you're seeing more of the engineering and technology that is coming from these new companies being dedicated towards our space, which is asset management. Um, I'm going to move on and just spend a moment talking about the platform that spawned our corporate venture capital program. So we're an incumbent asset manager for an insurance company, and our corporate venture capital on the insurance side was really the trailblazer for the program that we run. We have about a $400 million dedicated portfolio within Aflac Corporate Ventures. I won't go through all the details, but that program has been heralded by the analysts on Wall Street. We've made quite amount of investments. We've actually had a couple of exits. The portfolio itself is more mature than the one that my team runs, but we leverage that platform. We've got a dedicated innovation lab. We run our proof of concept programs through this larger enterprise, and we're a strong partner with that program. With that, I want to move to the program that my team runs, which is the venture capital strategy dedicated to asset management. So I'm moving on now to page 9. And we think we are somewhat of a leader in this initiative. If you look at kind of the large U.S. asset managers, the largest AUM, we think only between 5 and 10% of them have a program which is dedicated to investing in these nascent technologies. So we're optimistic that we're kind of ahead of the curve here. We launched our program a couple of years ago. As I mentioned earlier, our goals are strategic in nature. Returns are important. We're all investors, but we really look at the expected value of the program to have a number of qualitative success factors. We've got a dedicated sleeve of about 50 million. That's 50 million. We think that will grow over time. We haven't deployed all of that yet. We're still on that journey. We've got a dedicated team. We've looked at over 75 companies globally. We've invested in several of those already. We've joined boards and advisory boards where appropriate. We've launched a major proof of concept in the data space. I'll talk about some of the subsectors that we look at in a moment. We've stayed dedicated to the program through the turbulence of COVID. The volatility in the public markets really didn't slow things down too much for us. In fact, we actually closed the deal in kind of the middle of the storm, if you will. And one call out that I think is important is we think of the strategic benefits for our program, not just in terms of what they do for us in terms of who we are now, but also who we may be in the future. So when we're looking at technologies and thinking about our own evolution, much of which is still unknown, we think about the possibilities that some of these technologies and these companies can unlock for us. And then finally, and I think this will come as no surprise to many of you, and we have a lot of content on this week, the operator tends to carry the day for us. When we think about the business models that we've seen and the intellectual property and the technology, really it's, the bet, so to speak, tends to focus largely on the operating team. And we've seen that in our experiences so far. Just briefly on page 10, our investment process. So we have a large filtering process. As I mentioned before, we leverage the platform and Aflac Corporate Ventures. And we've got a dedicated investment process and filtering program that ultimately goes through formal governance before we execute. But the thing I want to call out, which I think is important to note, it's been for our experience for sure, is the importance of having a cross-functional team vet deals. Not only do you get different perspectives by having multiple discipline and multiple touch points, looking at deals, but you also grow buy into the program, and through that you're able to encourage the process of change, and so that's been a very important learning experience for us, and I'll talk about that in our final thoughts. Just in terms of the asset management space, no secrets here. Front office portfolio management, analysis and trading. That's where we see most of the emerging technologies dedicated towards. That's where we see most of the higher return on equity in terms of the strategic benefit for us. But we spend a lot of time on risk management as well, and then also, kind of middle and back office. A lot of technologies which were dedicated towards the banking sector and kind of traditional Wall Street sell side programs are now shifting towards asset management. And there are a number of very notable success stories, but there's also a lot of really interesting emerging technologies. And just in terms of noting a few of those on page 12, we've seen really interesting business models dedicated towards cloud-based solutions, whether they be for administration or for risk management or quantitative analytics. We've seen some great macroeconomic research delivery platforms. We've invested, and this is globally, in some artificial intelligence asset managers. We've invested in ESG-oriented solutions, and we've also looked at and invested in some tokenization, so kind of part of the broader blockchain ecosystem. But these are just some samples, if you will, of the models that we're seeing across front office and middle office and risk spectrums. To wrap it up, we're going down this journey, and it's been an enjoyable and successful one so far. The key takeaways for me are really thinking about the program in terms of helping us on a forward basis. So who and what will our investment platform look like, 5 years from now? What types of strategic insights and advances can we have to leverage kind of who we're going to be? So we think about it in those terms. It's important to have, senior sponsorship. So our board of directors and senior most management are naturally supportive of this program. But also at the troop level, and I mentioned this earlier, it's been our experience that by having these cross-functional teams as part of the process, you begin to kind of peel back the thread, if you will, to different silos of stakeholders. So an example might be, a certain group, a senior executive has some embedded technology that they've designed, and you're looking at a new solution. Well, that person should be open to and be intellectually honest in thinking about how to make that better. And so you need to create an environment that fosters that. And by being part of this process and making it somewhat of a reward to be part of this process, you can begin to break down those barriers and some of those insecurities. And we've seen that already with a bit of a cultural shift in terms of I want to be part of this. So to bring it to conclusion, it's been a successful journey so far. We've had some wins, so to speak, in terms of some of our investments already, just in terms of valuation creation. As I said earlier, the primary driver is the strategic insight that we're getting, helping companies create solutions for us, and seeing what's out there in the marketplace has been already kind of validated by our early stages so far. We see ourselves as being a thought leader, particularly in the insurance asset management space, and we feel as though we're already being rewarded for that. And we're going to be dedicated to learning from our mistakes. We're going to make them. We hope to make them. We expect to make them. That's part of the process and part of the journey, and we see that as what's going to make us better. So with that, I'm going to wrap it up. It's a pleasure to be with you today. I hope you have a great day. I hope this was useful, and I'll look forward to speaking to you a bit later in the afternoon. Thanks so much.